Wall Street went up bigly in 2023 for a variety of reasons that we can't get into in great detail today, but which may have something to do with inflation, shockingly. However, the media is now spinning that in a way that suggests Hollywood itself did well as well when it came to Hollywood's stock market value. Folks, we're here to tell you, though, that we're going to break this down and explain it in a way that you might not hear in the mainstream, because when you actually dive into the numbers, the analysis out of the corporate media doesn't seem to match the actual data. So did Hollywood fail in 2023 when it comes to the stock market and their value of their companies? We think so, and we'll show you right now. Hello folks, welcome back to the WDW Pro channel, where we endeavor to explain entertainment, keep you ahead of the culture curve. We do not, here on this channel, provide financial advice of any kind, but we do dive into finances where applicable. But all of that said, before we get into the applicable part of this, folks, make sure that if you're going to make any financial decision, that it is the decision that you yourself make, that it is part of the analysis of a financial advisor, perhaps, someone who is reputable and credentialed and all of those trustworthy sorts of things, not from a random YouTuber out there. Make your financial decisions on your own, not at my behest. This video is not such a thing. What it is, though, is it's an analysis of the overall increase of the stock market in comparison to Hollywood, and we're going to show you how the numbers don't seem to line up with what we're being told by the major news corporations out there. Shocking, I know. Let's dive in. We've got a panel, and you are going to love what they have to say. We'll break it all down for you. Today, we're taking a look at an article out of Variety by Jennifer Mass, taking stock of 2023, how shares of Disney, Netflix, Warner Brothers Discovery, and more fared this year. Folks, we're not here to give you any financial advice, so please, folks, if you hear us talking about financial issues, or issues, as Jonas would probably like for me to say, please make sure that you seek out your own financial consultant before making any decisions, somebody who is reputable, who is credentialed, and who is well trusted in your area. Here's the article. Hollywood had a rough year in many areas, but the stock market largely was not one of them. And I do want to say that as we get into this article, partly what's happened is, of course, that Wall Street overall went up, right? So the stock market went up. And so as the tide goes up, what you're looking for is you're trying to see which boats lifted up faster than the tide or which boats sank down below. And so you want to follow that line and see who's outperforming, who's underperforming the overall. You can use the S&P 500. You can use the overall stock market, whatever you want. Here's the article. Wall Street is poised to finish out 2023 up double digits. As of December 27th, the S&P 500 index has climbed 25% year to date and is nearing an all-time high record close. And in general, the majority of media companies saw their shares rise over the past 12 months, rebounding from a disastrous 2022. Again, no financial advice here, folks. I will say that as the stock market rises, pay attention to inflation, because inflation means that currency has a different value, and that changes everything regarding the stock market. So,
if I can throw an allegory in here, it would be like saying, I didn't drown, I was above sea level.
Yes. And so just keep that in mind, and whether or not inflation is being accurately reported with some of the numbers that we receive, okay? So keep all of that in mind, and let's move on. You all can pay attention to your own bank accounts, purses, pocketbooks, and everything else, and decide for yourself how you think the economy is performing. Some experienced significant reversal in stock performance, led by Roku, up 134% between January 3rd and December 26th, as investors regained enthusiasm for its streaming outlook amid the company's cost-cutting moves. Other gainers were Lionsgate, up 89%, Amazon, up 79%, Netflix, up 67%, Apple, up 55%, Comcast, up 26%, Sony, up 22%, Warner Brothers Discovery, who they're not going bankrupt, apparently. The drive-by said that was happening last week, and well, they're not. Up 21%, and AMC Networks up 15%. Those with smaller bumps, but bumps nonetheless, include Endeavor up 12, Disney up 2.2, and IMAX up 2. Now, here's where the trickery comes in. Now, if the overall stock market goes up 25%, okay, so the base level increases 25%, and Disney goes up 2.2%, that looks to me like, and Jonas, you correct me if I'm wrong, that looks like Disney lost 23% compared to what it should have done had it just stayed completely neutral. Is that correct?
Right. If you were investing in entertainment, if you were taking one stock as an indication of the health of entertainment, Disney would not be the one to pick. It would be one of these other ones.
Okay, so then AMC also seems to have lost. Warner Brothers also seems to have lost in comparison to the baseline of the stock market. Sony seems to have lost. Comcast stayed basically even. And then what that gives us is, here are the companies that actually outpaced the stock market growth. Lionsgate, Amazon, Netflix, Apple. That's it. Okay? That's basically it. Now, here's the issue that I have with the way this is being reported. And this is why we analyze entertainment. This is how we do it. This is how we break it down. When this article comes out and says that we saw growth in entertainment, and when we remember that inflation is a significant driver in the stock market and the way this is being played out, it seems to me that declaring entertainment had a good year when the majority of these companies are listed actually lost in comparison to their relative worth with the stock market a year ago. That doesn't seem like a good year to me. And furthermore, when we're talking about entertainment companies, let's eliminate a few here. Lionsgate at 89%, fine. Amazon is not strictly an entertainment company. And so the idea that the entertainment side of Amazon is what's driving Amazon's growth, that doesn't seem right to me. Netflix is legitimate. Apple, again, is not strictly an entertainment company. And I think it could even be argued that Comcast is not. And Sony is definitely a multifaceted company. When you look at specifically the entertainment side of this, Jonas, this seems to me to be not well articulated. That's how I'm going to say this. Again, taking stock of 2023, how shares of Disney, Netflix, Warner Brothers took over in more fair this year, and says the stock market was not one of the rougher points in the entertainment industry. I have to say, look at this. I think this was pretty rough.
I would say that this looks like the kind of article you get when you tell someone to pick out companies that of the last 7 movies you watched and follow their stock price over the course of the year. It's kind of a swing and a miss as far as actual analysis. There, you cannot compare Apple to Disney or Apple to Warner Brothers because Apple is based off of iPhone sales and services, which the largest part of what they sell at Apple is services like iTunes and Apple Music and all of that right now, which is amazing considering how much money they make on phones. And then Disney, the largest, most successful part of that company is ESPN or theme parks, depending on the year. So, which is not to be compared to Warner Brothers, which is a straight entertainment play. So AMC is a straight entertainment play, and the rest of these are much more complicated.
Okay, so look at this, Jonas, in the article. AMC Entertainment, all right, we're talking about the AMC is still the biggest theater chain, right, in North America?
I believe so, yes.
Down 84%.
Shoot.
I think it's fair to say the box office was not good, and it's not going to get good. Paramount, down 10%. Nexstar, down 6.2%. Fox Corporation, down 0.11%. This article, its starting point is to say that Hollywood had a rough year, but the stock market largely was not one of them. All of the data inside this article points the opposite way. If you're not a big tech company that happens to dabble in entertainment, it looks like most of them had a pretty rough time of it. Am I wrong, panel? Anybody have a different conclusion than what I'm seeing? Is there something hidden here that is just, obscured from my eyes?
No.
I just wanted to add that as much as I enjoy Lionsgate Films, they are a much smaller company as well. So that kind of an increase, while that's fantastic for them.
What a point. What a great point.
It does represent a much smaller change in
but CC, they're listed right along with Apple and Amazon. They're that big, aren't they?
Well, the article's simply reporting percentages and not giving the context. So sure, I mean, if your stock is worth $5 and you go up to $8, that's a 60% increase, or $9 is an 80% increase. That's fantastic. I mean, I'm happy for your company, right? But it's going to be a lot different than a company that's trading for $100 or $150.
And they can't understand why websites like thatparkplace.com are exploding in readership when we have articles such as this. And if you have any kind of understanding of what you're reading, you'd stop and go, wait a minute. The analysis doesn't match the data. What's going on here?
I'll also add that Lionsgate just bought Hasbro's Entertainment One division and sold off, was trying to get rid of Starz, their streaming service, which is not being sold with any of the intellectual property that's attached to it. So it's just the streaming service, none of the content.
And Jonas, that gets us back with Hasbro. That gets us right back to the issue again, where we had the news media out there talking about the reason that Hasbro was, falling apart was because, darn it, those Transformers just aren't selling anymore. Darn it, the Magic the Gathering and Dungeons and Dragons just collapsing. They've been taken over by the Demigorgon. And what turns out, when you really look at Hasbro and you find out their biggest partner seems to be Disney, and it seems to be that they need Marvel toys and Star Wars toys to sell. And then you look at our reporting a month before Black Friday where we said, hey, our sources are telling us that retail for these Disney franchises is collapsing. Seems to me that it's not hard to connect the dots on what happened with Hasbro, not alleging that we know exactly, but it gets right back to this news media situation where they report one thing and you look at the data and say, I don't see how that can be. I don't see how that matches up with what you're declaring to me. So I don't know. Maybe people just read the headlines and that's it. And that's what we're depending on if we're trying to spin the news. All right, folks, that's a wrap for today. The analysis is complete. Select the In the Can button, and this goes into the forever WDW Pro Golden Archives. We love it. We love having you here for it. Folks, thank you for being here. Hope you're having a happy, happy, happy time and a happy new year to each and every one of you out there. Folks, as you head out the door, consider clicking the like button, share, subscribe, and when you click it, you stick it to the algorithms. It's the notification bell. The Pro Show is live Tuesdays, noon Eastern time. Don't miss it. And wherever you are and whatever you're doing, keep learning, keep growing, and keep having fun.